Welcome, dear traders. You are watching a recap of the Asian session. Joe Biden and Kevin McCarthy reached a tentative deal to suspend the federal government's $31.4 trillion debt ceiling on a Saturday evening. This news fueled optimism on Wall Street. Asian stocks also climbed higher. The Nikkei jumped to a 33-year high. A tentative deal reached by Joe Biden and Kevin McCarthy will move to Congress for a vote in the next few days. The Treasury Department said it could run out of cash by June 5 if a decision is not made in time. However, this warning did not impact market sentiment on a Monday, as Wall Street is closed for holidays. After the parties clinch the agreement on the debt ceiling, investors will switch their attention to the upcoming Fed meeting. It will be held on June 14. The majority of analysts expect another 25 basis point rate hike. Last week, the likelihood of another rate increase was about 16%, and today this figure has increased considerably. Traders expect the regulator to raise rates following strong economic reports as well as the hawkish rhetoric of Fed officials. Persistently high inflation, increased consumer spending, and the durable goods orders data signaled the probability of another rate increase. According to the FEDWATCH tool, over 65% of investors have priced in a 25 basis point rate hike. The end of the debt ceiling standoff may adversely affect the greenback. An increase in the debt ceiling will lead to the money injection into the economy. It will definitely undermine the upside potential of the greenback as well as a demand for it as a safe haven asset. Therefore, the US dollar index slid down following the news about the success of the negotiations. Starting from a Saturday, its price has been gradually retreating from a 10-week highs versus its main rivals. In the morning, the greenback dropped to 104.10, trading in the narrow range of 104.00 and 104.30. Treasury notes yields keep rising amid a resilient US economy and expectations of new rate hikes. Volatility is likely to be low today in the currency markets. The US dollar index managed to recover on Monday. Due to a sell-off, it may reach support levels of 103.60 and 102.80. However, if it breaks through the 104.30 level, which is the high of May 25, it may test 105.60. A rise in the US dollar last week led to a fall in the yen. However, it facilitated the growth of Japanese stock indexes, while Japanese stocks are trading near 30-year highs, the yen is trying really hard to grow against the US dollar. On a Monday morning, it declined from a 6-month high to 140.80 and reached 140.50. In the Asian session, the dollar-yen was moving in the bearish channel of 140.20 and 140.90. However, bulls do not lose hope to continue the previous uptrend and push the pair to the weekly resistance level of 141. It looks quite likely given the growing yields of US government bonds and the possible climb in the US dollar. Commodity currencies rebounded as well amid growing risk appetite, and the Australian dollar even tested the resistance level of 0.6550. Oil prices jumped amid positive shifts in the negotiations on the debt ceiling, and this is a bullish factor for the Aussie. However, its upward movement looks fragile, and the Aussie retreated to 0.6535 during the Asian session. The main reason for the decline is that the Reserve Bank of Australia will hold a meeting on June 6. After the April pause and the May quarter point increase, the regulator is likely to surprise traders with its rate decision. Therefore, the Aussie is unable to start a steady rise. In the morning, the AUD-USD pair was moving in the upward channel of a 0.6520 and 0.6555. The New Zealand dollar climbed slightly to 0.6062. It avoided falling to its 6-week lows. After the Reserve Bank of New Zealand indicated a possible end of aggressive tightening, the Kiwi dollar pair dropped. So its upward movement in the range of 0.6044 and 0.6073 looks temporary and is driven only by external factors, for example, the weakness of the US dollar. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.